afternoon, good morning, wherever you're connected from. My name is Midas Efalijimo. I want to just show you how to increase your win rate as a beginner in trading, either crypto, forex, synthetics, irrespective of it. Of course, we are all much aware that in trading there are three things that are very fundamental in your trading: fundamental, technical, and of course sentiment. So these are things that you work with. So I'm not going to go there. So I'm going to go on technical today to show you how to increase your win rate, irrespective of anything you're trading. But get this to your mind. If you want to be mentored by Felix, you can chat with me on my number +234 90 470 44 and 998 +234 90 470 44998 is the number you can chat up with to get response of support. If you want to be mentored, you want to come into our private mentorship. Our private mentorship is expensive, but of course you're ready to learn and all of that. But let me just give you have been struggling in trading and you don't know what's going on. Of course, there's some level of discipline you must incur and to be able to be profitable. Now, if you're trading crypto and you want to be trading future, number one, I would recommend for you, don't trade too many coins. Remember, trading is all about being profitable and not just to make profit. If you are trading just to make profit, I can tell you you'll be gambling. But if you are trading to be profitable, then you will be more organized. So what I'm giving to you now is for you to learn how to be organized in your trading. And of course, you don't want to trade too many instruments. In the same thing, if it's Forex, you want to pick an instrument. And what my style call the formula 5 fingers. The formula what? 5 fingers. If it's Forex and currencies, what you want to trade, select 5 fingers. All right. So for Forex, those of you, of course, no beginner, we're going to recommend for you to start with Euro USD, GBP USD, GBP JPY, and probably USD JPY, and maybe one other one. And it only depending on the session you want to trade. You want to trade in New York, Nigeria local time, for instance. New York should be presently by 12 noon, 1 p.m. or something. You want to trade in London session. You want to trade in Asia session and all that. But of course, we always said better still to trade London and New York, because when a two-time align, combine together at a particular thing, you have more volumes happening. All right, let's go to futures. So you have to select 5 fingers. So let's say 5 fingers I'm going to select for you now is Bitcoin, Ethereum, BNB, Solana, Avas. Or if it's altcoin you want to trade, but of course, as a beginner, we always recommend you trade Bitcoin because it's not too volatile. So let's say you have selected Chainlink, SUI, right, AVAX, Solana, and probably BNB. All right. What to confirm, what to determine this your decision? Well, it can be anything, but there are things I check out for. Sometimes I pick coin from different sectors. So, but we can't go to that now. So we're going to go into just, I want to be profitable. So let's use Chainlink. First thing we talk about, so this is trading view. If you do not have, check on the comment section. There's a link there. Make sure on your browser, better still laptop, because of course, if you want to make a trading your career, you need to have both phone and a laptop for detailed analysis of your market. It's very, very important. You have a laptop to be able to view it in a wider space to see your chart properly. All right. So now you are going to need trading view. Don't need to pay for that. So one thing is that before you click on the link on the comment section or copy the link if you're on our group, so you want to have your email, Gmail login to on your browser. Okay. Once you have it logged into on your browser, then you want to copy the link. Now, because you are a day trader, you want to just be profitable as a day trader. Of course, irrespective of what trading you are having, first, look at this edge here. This is what we call watch list. So you're going to enable this place to have a place where you can put in all of those coins you want to be trading. They are called watch list. How do I add to watch list? You have to look at, this is a plus sign here, and then you come over here. And so let's say I'm going to add on watch list. Okay, this is Neuro something, right? Probably if I want to add it to it. So you look at it, plus sign. Okay, I've added it. So that's just to show an example. Now let's quickly go and use our chain link, even though I've added Neuro. So let's look at our chain link. First of all, look at here to help yourself reduce stress, you want to go into this drop down button, and the timing you are going to be trading with more or interacting with more, you want to make them your favorite. On TradingView, you can make a favorite. You just to click, you go to the front, you see a star, you make them a favorite. Just to click, you say, so what? Add to favorite. You click. So 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, and daily for you. Now I do weekly, I do 2 weeks and all of that month. And so now in your case, you have done all of those so that those timing can be available here. You will not struggle. So let's quickly click on 1 day. Let's quickly click on 1 day. I may not really have time to do this teaching properly, but why do I have to take you to 1 day? There's something you must do. In trading, we call something top-down analysis. So top-down analysis and key levels. So this is chain link, top-down analysis and key levels. How do? I need to draw key levels. Key level means point of importance where market got to at a point and reverse, or it got to it at a point and reject. So they are area of importance. So to do that is very simple. Look at it up here. Of course, if you want to know how to navigate TradingView properly and all of that, you have to come into our academy to learn this more detail. But I think I'm going more detailed than what I even expected to do here. Now let's go. So let's go here. We go to the candle. Look at it. Just take your cursor, whatever thing you're looking for. You do not understand it, place your cursor on it. It's going to tell you this is candle. Click on it, and then you see what line. So click on this line. So I turn it to a line chart. Now what I want to do, I want to draw area of importance. So here you see this point. Normally what you are going to see is trend line there. You place your cursor, you see trend line. There's an arrow in the front. You click on it to give you a drop down menu. So what I'm picking is called horizontal line. Sometimes too, those one you want to be using, you can organize them, and by the time you make them favorite, okay, so by the time you make them favorite, you're going to have it here. Look at mine. So horizontal line is already here. I'm going to pick it. So here we go. I want to identify the roof and then the bottom. So the roof and the floor. So let's say this is the floor within just this time frame now, within this such in what I can see on my view. So I have the roof and I have the roof and I have the floor. So I've gotten the roof and the floor. The next thing I want to do, I want to see in the middle what area of importance can we find. So perhaps I want to pick this now. This one is already up. So how many touch points? If I go with more recent, if I put it here, only one. It's not too significant. So let's go here. So we have how many here? 1, 2, 3, 4. Though others will show weak. All right. So 1, 2, 3, 4. Makes sense. Those other one broke through it, no problem. So I'm going to pick the horizontal line again, and I will go here. Let's look at this. So 1, 2, right, 3, right. So if I drop down here, I probably may not meet up with this. So I want to see more area. You know, this is daily, this is not monthly. So I'm not going monthly because you are not going to be over professional, okay, or swing trader. So let's take this now. The next is, if I go here, so you can always just find a way to adjust it. This is 1, this is 2, and this one actually broke through it. If I drag this now, okay, maybe this will be more better, right? Because we have this as a turning point here. So here, still touch. Makes sense. That all what you are doing, this is mapping. You can see I call it organized trading. And you are not just trading to make profit, but you are trading to be profitable. That means you grow an account, okay? That in Forex, in futures, in synthetics, and all of that, you grow an account. So here we have. So we have marked all of this. So let's pause here, or perhaps take another one here, you know. So let's take this one here. Makes sense, right? So see a touch point, and a touch point down here. So you are done. This is mapping to do your top-down analysis so that you'll be able to get what you are looking for. So I've done this. If I want to do, I can do this one too, right? Look at this. This was a new coin, so there's no point disturbing myself over this guy now, right? Okay. Okay, so let's go. So we have done the chain link like that. So go back to your line chart and change it to candle. Fantastic. So we got this. So these are area of importance. If you need to adjust it a little, you probably could adjust. So if you want to leave it that way, you probably just leave it. Okay, so now you can see most time when you see my chart and I send you a signal, I've already marked those points even before market gets there, right? So now let's go. So what do I do? Chainlink is selling, all right? So Chainlink is selling. Now, if Chainlink is selling, no problem. So what do we do? So I say you as a beginner and you want to be profitable, there are few tools I will add to you. But before those tools, there's something called market structure and what we call trend. So if you can understand, so three things you must put in your mind: price action, market structure, trend. Price action, market structure, trend. Call it now. Are you sounding it? Follow me. Call it that way. Okay? What did you say? Did you say, price action, market structure, trend? Price action, market structure, trend. What is price action? Price action is actually the movement of the market with a kind of indications with a candlestick and a chart pattern. So it's the more combination of more candles. So more candles combined together is what give birth to charts. All right. Buy and selling, bid and buy in the within and creating a spread is what give birth to what? Handle. So all of these things you're seeing here, they are candles. Okay. These are candles. These are candles. So if these are candles, very simple. So what you want to do is that, okay, candle actually interpret the action of buyers and sellers in the market. So for that, you want to see how the candle is actually reacting. Over time, you can learn what the anatomy or the Bible, the candle Bible or something, candlestick Bible. I have some document like that, so you can read through to understand all of this, give you better picture of the market. Okay, now if I've gotten the candles, okay, all of this. So since we're on daily time frame, each of these candles represent 1 day activities. All right, so now I've marked this. It's very important for me. Now, you as a day trader, the best thing you don't look. So if you go to, so now, daily candles to show me key levels and of course open and close of the market perhaps and all of that. I just want to see a direction, right? So now 4 hours, 1 hour, just give me a very fantastic trend. Okay, now this is like, I'm going to give a trend line here. Let me pick it from here and take to this point. Now I'm connecting. Can you see now? I'm just connecting point to point. Okay, we have a touch point, we have a touch point, and all of that. Now see what happened. This market was actually going up because you have marked it, was going up, not even getting to this key level and start going down. Look at this long candle. This guy is going to close down to this point. We'll get there. We're going to do something very fast now. Okay, now if that's the case, this is 4 hours. If I go to 1 hour, you can see a better trend within too that you want to interact with. Okay, so this is 1 hour. I've not finished what I want to do, but just to show you as a day trader and to be profitable. Now, ordinarily, you have marked all this key level. Your trading zone will have been between here and here every day. If the market is here, you want to see the reaction of the market. If it's going to have momentum to climb up to this point over some days. Okay, if it's up here, if it's going to return down to this point over some days. So, but remember, you are going to a lower time frame to find a trade. I told you about what? Price action, all right? Price action, market structure, and trend. So price action has to do with the candlestick and the chart pattern, okay? And of course, this will give birth to activities or what we call the support and the resistance. So for that, you have done this now. So I'm moving to this. And the best, easiest trading strategy that can help you is to understand where the support is and where the resistance is. But if you don't understand price action, you may not identify where support is and where resistance is. Okay, now, so what do we call this market? This is a downtrend. On 1 hour, it's downtrend. On 4 hours, it's downtrend. And how do we know that it's actually a downtrend? So if I take it, even irrespective of if I pick it from here now, either I go back too much or not. So there it became flat. All right, this was a flat rejection, rejection, rejection. Look at it. All right, came down here, rejected, rejected, rejected. All right, and eventually try, never got up there. That's a rejection. So let's even take it from here. So here was a high. So let's go by structure now. Here is a high. So I'm going to take a mark and I will take a text there and I will write H. Okay, so let's look at it in capital letter. Okay, so this is H. Now, but because in this, within this time is the highest, so I'm going to label it as double H. Okay, double H. So it become what we call higher high. Okay, so this is double H. Now, the market moved away from there, and what did it do? Very simple, right? The market moved here, from here, and went down to this point. Now, I made attempt and went up here. It went, so this is not up to a swing on my 1 hour. So this is here. It went up here, came down here, has gone up here. So let's say we're going to have it here, perhaps. So now what has happened here is this. This, for the time being, this is the highest. So which we call it higher high. So now the market, where did it come down to from this high? It came down to this point. This is a low. All right, this is a low, and so this is a low. Now, next we have, very simple, right? Next we have this guy move here. So very fantastic. Now, this market came down from here, moved down here. It tried to move up and couldn't meet up there. So we're now going to have this. Let me just do this for you. So pay attention, it's very simple. Being profitable, you need to be disciplined to learn just basic things. Now, this is not going to be higher high. So this is going to be LH. What do I call it? LH, which is called what? Lower high. Okay? This become lower high. Because why? It is still high, but lower than this. Now here is a low, but you are going to see as lower low anyway, right? So let's go this way. If you can understand price action, right? Price action, market structure, and right? Price action, market structure, and trend. Good. So this is a downtrend. The market was going down. So this is low, this is high. Then this is another low that was lower than this, okay? This is another low that was lower than this. So let's take this guy down here. All right, so here we go. Okay, so here, down here. Very good, right? Now the next high, obviously, here. So it become another lower high. Okay, so here. This is another lower high, okay? Then this high created another low here. So let's take this. Okay, this one become another lower low. Okay, so here we go. We take this guy again. So here, this guy become a lower high. Now, see what happened here. So if I begin to stretch further, look at what? So follow me and take it one step at a time. So I'm not trying to teach you a complicated thing, right? So this is a high, this is a low. Now, when smart money concept tell you some concepts, so I want to stretch this out for you to see properly. So when this guy was here as a high, he created this low, he now returned back here, and this is sign of weakness and failed. So this rally failed, he couldn't come up here again. So that means this guy become more strengthened and stronger. In most cases, you expect the market to actually come back and grab this liquidity. But this is an extreme case when the market was actually very, very bearish. Okay, so in this case, the market continued to rally down. You have another low. So when it crosses here, it is called break of structure. Okay, it has destroyed the structure, break of structure. And it went down again, rally up, but never got up here. So you will have taken this guy very seriously. If you are returned back up here, and close and grab this, then the market is trying to change direction. All right. But in this case, it got here and failed. Then this is another low. Then this is high or lower than this. Came down, was lower than this. Break of structure. Move up again here. And now here, it starts failing, right? Never got up here. Now, you're going to take this guy serious. If all this movement is doing right now, see now, it has created what we call swing already because about two close, all right, in this direction. So if this market decide, look at this previous low here. So that means this market, where you see have issues here, is this. This market could return back to this point. That's about 14.17 and bounce. So that means it actually collide with this. After the bounce, then you are going to have what they call market structure shift. Why market structure shift? Because this time around, this was the lowest, which you expect the market to come down and break, perhaps, and continue to go down. But this time around, this is the lower high that created this low. The market return, it didn't break it and start coming down. Makes sense that the market is continuing trend. But a change in the market direction can happen if the market gets here and bounce. So once it bounces here, so if the market decides to bounce from here, okay, so here, now this is low, this is high, it bounced from here, and then this now become another low. But this time around, not lower low, but a higher low. So you're going to have what is called HL. Now, if you become HL, then that means you are now changing your trend, all right, from, right, so this guy become HL. So you are now changing your trend from downtrend to, you are changing your trend from downtrend to a what? Downtrend to an uptrend. So if that happens, but even if this guy starts changing from here, will you take it serious? You want it again to break a structure. When it breaks this structure, above, then you wait for a pullback to retest. That's your entry. So, but this, what I'm showing you, just the bedrock of your trading activity. So now let's go. So now we have seen the market. This is actually not where you are taking your trade from. I'm just showing you what it's called the price action, the market structure, and the trend. So quickly, as a beginner, you want to be profitable? Very simple. So there are two instruments or indicators that will help you to gather some momentum because you're a beginner. One is called the MACD, MACD. It helps you to identify momentum and, of course, divergence in the market. The second one is called the trend, the market trend indicator, which is called moving averages. These two. So now you're going to go to your indicator and perhaps click and type 10 in 1. So I want you to use your trend because if you are using free trading view, you can use more than 2 indicators. So 10 in 1 moving averages is going to help you to be able to plot those trends I want you to add. So that's, you click 10 in 1. So when you type 10 in 1, you're going to see 10 in 1 different moving averages. You add to your indicator, all right? So here is it. Good. So you add to your indicator. And so once you add to your indicator, it's very simple, right? Fantastic. Then the next you want to add is called the MACD, okay? So we'll go here and you type MACD. Very simple. Moving average, convergence, divergence. You add it. So once you add it, you are going to have something like this. Okay, never mind. Okay, fantastic. You're going to find something like this. Now, very quickly, so let me take off all this line I drew for you guys so that you're not too dirty. But you leave your key level. So let's take this guy off. Okay, so now, so let's go quickly. Now, this is 1 hour time frame. Is that where you are taking trade at all? You're actually not taking trade there. It's just for you to identify the direction of the market. That's a downtrend. Okay. Now, I told many persons when you are trading. So now, if you go to setting, there's something you need to set on these 10-in-1 moving averages. So quickly, follow me. What do you set? You go to input and tick MA1, MA2, MA3, MA4. Now, the first MA put 800, the second put 200, the third put 50, and this one put 21. Okay. Now you can change to the color of your choices, anyone you want to use. Then you go to style. And now you increase the thickness. Just click here and look at my thickness. Right. I change the color to black and make this one red. I change to the second, third level thickness. And then I go to this. I change to green and make it to the, okay, the same thing. And then white, this last one, I make it blue. And I change it to the second level thickness. And then I click OK. Okay, first, I remove these precisions under labels and price. I take them off. Very fantastic, right? So this is what I'm going to do. Now, very interesting. You want to look for short position if you are trading future anytime the market price is below 200 moving average. So that means if you are obeying that law, now if you are obeying that law, here will have been your start selling market here, because this right, this guy here, this red is the 200 moving average. So when you are below 200 moving average, you want to look for short position. Now the market move up again here, and as if you cross this a fake out, if you understand market structure. Because if you look at it, now if you have been following your market structure, you look at this is your key level, and the market rally up and fail. Then you're looking for a short position. And the same thing here, short position, right? Okay, so let's go this way. Okay, so now this is even now below 50, short position. In that order, short position. In that order, short position. All right. So now let's go to where you probably will be taking trade from, because if you're a day trader, you're a beginner, and so you're going to go to 15 minutes for intraday. So understand, 15-minute trader intraday. It can still be a day trader style, but intraday better still for you, right? So let's go on 15-minute time frame. Look at it on 15-minute time frame. So you want to save yourself from too much stress, okay? Let's go. Now, combining your MACD, right? Combining your MACD to, so like now, if I was in this place, I will have short this guy, because look at it, go to 200 moving average and get rejected. I will have short. Where should be my take profit? Perhaps the previous low or up here. Look at it. So now let me just do one, and then we come back to continue. Let me just show you. I'm going to take a trade here. Just show you here. All right. I just want to show you a trade, so that while we continue the presentations or training, that can be running, right? Okay. So let me share with you on Chainlink, right? So let's look at Chainlink, right? So there's a trade that's running now on Bitcoin. It's just an experimental trading. So link, right? Link, right? So this is Chainlink. All right, so this is Chainlink. Perhaps look at what I was telling you. So if I want to go short Chainlink, so there's something called, this is my ruler to measure my trade. So if I'm going to enter the trade, and where should be my stop loss, I'm just going to show you all of those things. So, but we're actually coming late because you're supposed to, that's why you are an organized trader. So you're not just jumping in anyhow, right? So let's say I'm entering Chainlink. Okay, this 1 hour, so I'm going to go to 15 minutes. Or even for a scalper or a day trader. So 5 minutes time frame. Okay. 5 minute time frame. So you can see what I told you. If you are actually following your trade, you will have been in the trade earlier, and I'll show you why or when will you have been in trade. So let's go. Chain link. Just want to put in, let's say 20. So the equity display there. So what I'm looking for is to short the market, to place order to short the market. Okay, so chain link. Okay, so now let's go back to what we're doing on the analysis page. So now we have said this here. So let me take off this guy so that it not confuse you so much. Okay, so now this is it. I told you guys that the first is, now you're going to combine two things around here because of, just the dimension. So this is 15 minutes, either 15 or 5 minutes, whichever one you want to use. Remember, you've marked all these. These are your key levels, daily key levels. All right? These are your key levels. Now, this guy, I've tried as much as possible to rally up to this point, but it's failing. How? Then I'm going to be checking what called support and resistance. What support and resistance? Now, let me show you here very quickly. You see this point here, this guy here. This is a resistance. Okay, so smart money concept, people will talk about buy side and sell side liquidity and all of that. So here is a resistance, right? I'm not going to go detail about support resistance strategies, a thing I've taught separately. Now, but what I'm checking out is that this is a resistance, potential resistance when the market is coming, should be disturbed. Now, outside that, the market was ranging, and then I got another kind of resistance here, which is here. Don't mind. I'm just going to show you. So this is another one. Right? So this is another one. Here you go. Market has come down, all right, and then broke, which is like a fake out or what they call liquidity grab, as it were, in smart money concept. Now, outside that smart money concept here was a low that created this high. Here was a low that created this high. So you just want to understand market structure. And now this guy created and then move up here. So we can take this now because this is not up to. So now the market rallied up and grabbed all of this and returned and broke the previous low. Now, after breaking the previous low, make a rallied up, of course, failed. So here you have this. So even this market that is doing now could rallied up, which has done back to this point, 14.57. And you want to have it rejected. So for smart money concept traders, haven't broken this, is this retest they are waiting for to short from here. So they will short from here and take their stop loss here. Now, you as a beginner, now you want to work with even both your indicators. Of course, understanding price action will help you to then see what happens. So let's go to 5 minutes where you can easily find an entry. So what are you looking for? This is 5 minutes. Here is 5 minutes. Now, you want to see from something very, very important. In your 5 minutes, the market have shown signs, and of course, you have find different places the market was coming from, right? This is the bottom right, for instance. Here you go. The market have been dilly-dallying all of this. Remember what I told you about the market, that anything below 200 moving average, be looking for a sell. Yeah, even though the market is rallying back, fine. So now MACD crosses. Let me just quickly explain MACD for you, the power of MACD. MACD is a very powerful tool. Why? but it can mislead you in a sideways market. When market is not well trending, MACD is going to mislead you. But when market is well trending, MACD will give you a very proper direction. Now, there are three contents of MACD. You have the histogram, you have the MACD line, and then you have the signal line. Now, the histogram shows volumes. MACD line shows a return or direction change. Now, if direction have changed for a buy, I will see volume adding up. So the green and growing, that is growing in the length or the whatever, it shows the volume available for the buying region. So when your MACD crosses and you have a volume here, then you want to now check your price action. The same way when it crosses here, you want to see the volume and you want to check your price action. So it cross, volume, price action. So let's quickly go. Now, so when we come here, so you see the MACD here. Just so this way. So you could see this. There was a cross, there's a momentum. Now your price action need to align to. Now, to be on safer side, because you see that you are below 200 moving average, right? This is like a low, right? A low and a high. So now, follow your price action. What I do is very simple. I've seen a high, a low, which is here, and I mark it as what? The support. All right? I mark it as a support. The market rallied up. What I want is the market to return back here and create a double bottom, number one, or return back here and grab the liquidity, number two, or fail to get to this point and rallied up. So for you now, you probably, because of your MACD, you will have found an entry and put your stop loss. But that means at this point, you do not really have a trade. Yes, you do not have a trade because your bias was already looking at, we are bearish, but the market is not just giving you what you are looking for. So here, the market rallied up and look at the MACD cross. Then we rejected, this is 800 moving average. You have rejected, and then your MACD cross probably could be. So that the best to have entered this guy was since, which is at the price of this point. Now, what should be your stop loss above this point? And what should be your target take profit, right? Your target take profit maybe somewhere here. And I think that's where this guy got to now and struggling. Then, or the next liquidity point, which is here, 14.11. You know, I've said it already. So now, so if you have entered, perhaps what to do is to measure your risk-reward ratio. All right, your risk-reward ratio, short. Then you say, hey, short from here, stop loss above this guy. So then your take profit, number one, can be 1:2 risk-reward ratio. So let's go by that. So this is 2 risk-reward ratio. And that's about 14.29. That will be your take profit. 1:2 risk-reward ratio. Let's see how many percentage is that. That's about 2.72%. If you are using 10x, that's 20%. And if your exposure is $100 or $200, that will be 20% of your $100 or your $200. You get it right? So that's how you find an entry profitably and all of that. So, but this is actually pushing back. Don't worry. You are looking at it either to get rejected at this point or here. But best bet will have been you are in this trade earlier than now. So MACD and then moving average can give you a kind of support for your decision making, but you must understand price action and all of that. Okay, we're beginning to have some interesting thing here where this guy have created a support. So let's take off this guy. This guy have created a support here. Look at it. So, but one of it is that this is not up to a swing because the market should have come, but the MACD is already showing a return, but may not be sustainable because it's not up to a swing. Why? For you to recognize that a place is swing, you should have at least three close candle towards that direction. If it's negative or positive, you should have 3 positive candle close, going to that, 3 negative candle close towards that downside. Okay, so you are still waiting and you have short, for Bitcoin and all the like. So I'm just showing you all of this because it's a very fantastic stuff that you can settle down to know what you are doing part time and be making money. So these are an organized kind of trading where you don't just randomly pick coin. So there's unorganized. Do you still make money in unorganized? Yes, but you have to be meticulous. When you search for a coin in an unorganized manner, then when the coin had actually uh, given you money, you want to settle down with that coin to trade as much as possible. So ladies and gentlemen, using MACD and understand support and resistance can help you a lot to be profitable in your trading. Not just gambling or trying to meet up, but you want to actually be profitable. So I've told you, trading is not about making profit. Trading is about being profitable. And to be profitable, you have to be well organized and arrange your trading activities. So the same way, look at it on 15 minutes. That means on 15 minutes, we'll have been in this trade, right? Because this was like a breakout and retest even below 50 moving average. You have in, you are creating your stop loss. Where should be my first take profit? Of course, there's an area of importance here. The next will be 135 or so region for Solana. And perhaps maybe returning back now here. Okay, so I'm just giving you all of these so that you can learn and apply your knowledge as expedient as possible. Okay, now for this guy now, Bitcoin, you can see maybe if you short Bitcoin, yes, we short Bitcoin before now because we're using a different time. So that means for Bitcoin, you have potential of bouncing from here because these are above 200 moving average. Are you getting it now? These are above 200 moving average. You fail, then you are looking at Bitcoin to come to $82,000, which is very possible. Today is Saturday, then it can come to $82,000 for Bitcoin. But if you break this and then take out this, then it's bouncing up. That's why you use stop loss so that when the market is no longer in your favor, it will stop you out with the loss you have incurred so that it will not be too much and all of that. So, ladies and gentlemen, if you are watching, so you can see like this type of token now, it will have been, this is a massive candle, and then it now engross and come down even below 200 moving average. The next pullback will have been your entry, and in this type of coin, these are meme coins, or so 16% to where it is now. That's about 23%. You use 10x, you're already on 230% profit level. You get it? All right. So that's one of the things you will have to learn. And most time when you set a trade and you're already running, don't jump out or jump in. So just set your setting. You have agreed that, okay, this is the amount I can agree to lose, and let the market play out its own part. So don't try to circumvent the movement of the market because you will just get yourself into trouble. Okay, so ladies and gentlemen, this is how it is. This is how it works. So both on spot, on crypto, or forex is the same style. The only thing in forex, sometimes you have to be checking on the fundamental calendar, economic calendar news, so that to know when important news is coming, not to be victim of circumstances. All right, so thank you very much. So go to the comment section and pick the link for TradingView. Then if you do not have any exchange or broker that you're using to trading for your trading, crypto, forex, synthetics, we have all the brokers available, right? And we have the exchange available. Go to the comment sections, pick the link, Bybit, Binance, BitGet, Next Global for crypto, and of course, for forex, we have Capital Extents, right? We recommend so many brokers that you can use, and then some that have a very nice spread. For synthetics indexes, we use Well Trade, and for boom and crash for deriv and all of that. So thank you very much. Pay attention, let's learn and apply the knowledge to be profitable. Do have a nice day.